Hello and welcome to this week's webinar. This week we're going to be talking to you about all sorts. We're going to start with giving you a bit of a business update. After giving you a business update on how we see things going, we're then going to talk about the bounce back loan scheme, which opened yesterday. We'll talk about the self-employment income support grants, and we'll also talk a little bit about the local authority grants and how that has been extended. Before we get underway, I just want to say to you that we've got Diana doing the slides today. Thank you very much, Diana, for that. Let me chuck the agenda up for you. Diana doing the slides, Charlie answering your questions, and as ever, me chatting to you. I hope you find it useful. Let us know any questions you've got as we go. It'd be great to hear your questions as we go because it gives us a bit more time to answer them, and also there's a bit of a delay on the feed, so it just means that we'll definitely have your questions and be able to answer them before the end of the presentation. I think last week there were some questions that came in, but they came in after we'd finished, so thanks very much for those questions. We've answered them separately. This week, ask them as you go, and we'll make sure there's an answer there before we finish. I've just got to remind you that if you use your name, we might also use your name, and these are being put onto YouTube. Therefore, please consider, if you don't want your name to be on YouTube, please don't use your name. You can post anonymously, and that's absolutely fine. Also, this is our opinions on current affairs rather than specific advice. So before you use any of the information in this, if you need specific advice for your business, get in touch with us and we'll be happy to help you with that. Let's move on to look at the furlough statistics as part of our business update. So the Chancellor, maybe a little bit nervously, is now announcing that 6 million people have been furloughed, and that's costing over 8 billion, I think is my understanding. Yep, costing over 8 billion so far. And these are numbers that are comparable to the cost of the NHS. So this clearly isn't a scheme that will be viable long term. I can see why they've done it, but it will not be with us forever. He has said there will be no cliff edge to the end of the scheme. That was in some press interviews yesterday. What I'm not sure about is he saying that there will be no cliff edge to warn businesses that it's coming? Or is he doing it to kind of reassure people on the economy side? Is he saying it for the MPs just so that they know that it's being thought about? Why is he saying there'll be no cliff edge? And if there will be no cliff edge, how will it be that this scheme is softly removed? Could it be by sector? Could it be that the amount of support that we get for furloughed employees is reduced to encourage us to put them back into work? Will the way he does it differ per sector? We just don't know at this point. We know he's saying there'll be no cliff edge, but if you ask me, that could just be him warning us that there will be a cliff edge. And as he can see a cliff edge, if he starts talking about it now, then it will feel like there was no cliff edge because he has given us forewarning. Business impact. What happens when the furlough scheme ends? So bearing in mind we don't know what will happen and exactly how this is going to end, it might be time now to think about how you're going to get staff back to work. Are there ways that you can gradually bring people back? Who do you want to bring back first? Are you going to bring everyone back at once? Are you going to reopen your office, or are you going to continue working from home? Certainly for us, with a team of 6 people, I'm concerned that if we're all sat in the same room, that if one person were to become ill, the whole team could very quickly get the same thing, and then we'd be in trouble because we'd lose maybe 2 weeks of time for the whole team at the same time. That's assuming that we all got something that took us down in quite a bad way, like the flu, which still feels like a real possibility, even though the cases have reduced. A lot of people seem to be moving about a lot more, and a lot of people are talking about that. I think for me, the business risk still remains if we all get ill at the same time, then that could be incredibly painful for the business to try and sustain at a time when it might be that the government support has reduced. So I'm keen to avoid that. Other things that are on my mind. Oh yes, so as well as considering how we get people back to work, it's time to start thinking about what supplies you might need at the same time, because I've got a feeling that as soon as we go back to work, it will be incredibly difficult to find commercial supplies of certain products that that we may need. For example, I think commercial supply of hand sanitizer and things like that, maybe the stock is starting to recover, but the second everyone has to open their offices again and there's strict rules about how we can work in a small space, then I'm sure there will be some supplies that go out of stock very quickly, and that could stop you from opening, especially if you have customers coming into your business. So please think about that now. What do you need in order to resupply? I know of a particular client, and I'm sure there's many of you who've done this, but there's one client in particular who has been promoting the fact that they're preparing to go back, and they've been buying the sanitizing gels and the single-use items that they will need for their specific business to be able to reopen, assuming that there are measures that stop us from going back to business as usual. Okay, but there's also opportunities in that. There's opportunities that are presented themselves in that, because as this business has done, they're able to market the fact that they're ready to go back. They're able to talk to their customers, keep them engaged. And I think that if we can maintain loyalty, well, that'd be a fantastic thing at this time. So another thing that's been on my mind is on the next slide, Diana. So if you wouldn't mind just flipping it forward to the next slide, we'll have a look. Bounce back loans. Do I need to borrow money to keep up with the competition? Now, this is a question that I've been asked this week, which is why I've put a little slide in it. If my competitor is able to get a £50,000 bounce back loan and he takes the full amount and he's got interest free for a year and he can borrow at 2.5%, which I will never be able to do again after this day, surely I must take my £50,000 free loan as well. It's not a free loan, it's interest free for a year and it's repayment free for a year, but it's still a reasonable rate of borrowing. Compared to some of the coronavirus business interruption loans that are out there, this is certainly cheaper. So should I do it? Should I take this 50 grand? Should I set up my war chest just in case I need it? Well, if you don't have a war chest and you think that times are going to be tough, then it's a nice idea to have one. Is it worth the cost? What will you spend the money on? How much will it save? How much profit will it make you? So I put this in last week's slides as well: strengths, weaknesses, opportunities and threats. But before deciding to borrow money, do just think, what are the strengths and weaknesses of my business? What are the opportunities and threats? And if you think the threat of you running out of money because of external factors is high, maybe that will encourage you to feel the need for a big war chest. However, if you think there's so much opportunity available because of the market factors, maybe you might think, well, I don't need to borrow this money. Certainly, I know someone has come to me and said, I might borrow it anyway, keep it in the savings account and repay it after a year. I'm quite sure that's not the intention of this scheme. But if it is there for us to bounce back, maybe you don't have those plans fully thought through, and yet you want to build the war chest ready so that you can very quickly respond to whatever happens over the next couple of months. Certainly, week in, week out, things are changing, so that might not be a bad idea. Ensure that what you're doing is within the spirit and certainly the terms of the loan. I think that makes perfect sense that you would look at that before taking money. And just think, what am I going to do once I've got it? One suggestion I've got is, if you've got the money and you've got maybe a few different ideas of what you might spend it on, is to do a little bit of something called capital appraisal. Capital appraisal is where you look at what a project will cost and what it is likely to return for you and how quickly. And you think, if I put this money into this, will I get my money back? How much profit will I make and how quickly? How much risk is there in that? So if you're asking yourself those questions, you're considering the SWOT of your whole business, then after doing that, I think you can make a considered decision, considered opinion about whether you need to borrow money or not. So that's business impact, and that's what I just wanted to say on a couple of questions and things that businesses have been talking to me about this week. Next, we're going to move on to talking about the bounce back loans in a bit more detail. So the applications for bounce back loans are now open. You can make your application as of yesterday. They said 9 AM. I think most banks had it up and running by lunchtime, and the process of applying is straightforward. It's a simple form without too many questions. I think the trickiest one for some people will be they need to know their company's registration number of Companies House, but that's easy to find. Even if you don't know it yourself, a Google search for the Companies House website will quickly tell you that. It's also on the front of your accounts, so just look there if you need it. Obviously, if you're not a company, you won't have a company registration number, so that only applies to companies. It's a 6-year term for this loan. It's 2.5% interest, so that's new since we were speaking last week. It was announced on Friday night, that the fixed rate of interest for these loans will be 2.5%. There are no repayments and no interest payable for the first 12 months of the loan. I understand that you can repay it at any time without penalty. I understand, but I haven't checked that, so that might also be a positive. It's 100% government backed, but let's talk for a moment about what that means. I've got some information on the next slide about that. The government backing is, let's see the next slide if you wouldn't mind, Diana. Oh, no, I'm going to make you wait for it. Let's have a bit more information about it and then we'll talk about the government backing. So how much can you borrow? You can borrow between £2,000 and £50,000. The maximum you can borrow is 25% of your turnover. How do we calculate turnover? Turnover is the annual turnover in the calendar year 2019. So from 1st of January to 31st of December, regardless of your trading year. However, if you're a new business just set up in the last year, then the guidance, the instruction even, because it's part of the application form, is to estimate your annual turnover based on your results for 2019. So if you've had a stonking first quarter for 2020, it's a little unclear whether you include that or not, but it's saying estimate your annual turnover. So if you've got good reason and you can demonstrate a figure, good reason to use a figure and you can demonstrate why you've used it, and it is an appropriate estimation based on your 2019 turnover, then I think that's what they're looking for. If you're unsure how close to the line you can go, I would suggest you speak to your lender and you ask the lender, typically your own bank, but I know other providers are also opening themselves up to the scheme. You ask them and you just check for clarity before you make an application. The other condition that I was a little uncertain about last week is, what do they mean when they say businesses can only apply if they're not an undertaking in difficulty? And the definition for undertaking in difficulty, certainly that I've seen banks use, looks to be the European Commission one that we looked at last week. So if you need more detail on that, have a little look at last week's slides. They'll be up on YouTube. You can see what we talked about there. But primarily what it's saying is that, oh, hang on, would you flip on another slide, please, Diana? I'm all out of order today. This is no good, is it? No, we're not going to flip on a slide. All right, you can just look at me instead. You don't want any spoilers, you see, for what's coming. It's probably too late now. Anyway, hello. So the undertaking in difficulty looks to be defined as if you have more losses than profits. So you may have made some profits in some years and losses in others. If the losses are bigger than the profits, your cumulative position is a loss. Then, broadly speaking, that means you are an undertaking in difficulty. The more strict definition, or the more accurate definition, is that if your cumulative losses, so all of that added together, are greater than 50% of your share capital, then you're an undertaking in difficulty. However, in many of our businesses, the share capital will be a tiny number, maybe £10, maybe £100. So half of that, £5 or £50. It's essentially saying if you've got more than £5 accumulative losses, you're an undertaking in difficulty. If you're unsure about that, again, speak to your lender. My understanding is that in some cases, you may still be able to borrow on the scheme. I'm not certain on that, but it's how it looks from the application process. Is that if you are an undertaking in difficulty, it's in the terms and conditions. There are specific things it says, I confirm I am not this, whereas for undertaking in difficulty, it says, I confirm that if I'm not an undertaking in difficulty, this applies, and if I am an undertaking in difficulty, another set of rules apply. So that implies to me that they may allow some undertakings in difficulty to apply for the loan. It's the most times I've said undertaking in difficulty in one sentence in a long time. I hope it made some sense. Right, now we'll talk about government backing. Didn't see that coming, did you? So it's 100% government backed, this loan. Which means if you have a company, a limited company, the liability of the shareholders and directors is normally limited, as in the assets cannot be taken, the personal assets of the owners and directors cannot be taken to repay the loan, so long as the directors and shareholders have been acting in compliance with the law and the Companies Act to fulfil their duties to the company. If you're uncertain about that, please get in touch. We'll probably pass you on to a good friend and company round the corner from us who can talk you through that in a lot more detail than we can, but it's certainly worth discussing before entering any kind of loan agreement, because it's good to understand whether you're personally liable or not. However, if you are a sole trader or part of a partnership, just watch out. Because although this is 100% government backed, in those types of entity, you do not have the protection of limited liability that a company enjoys. And so your personal assets may be at risk should you fail to complete loan repayments as per the loan agreement. It has been said, though, and this is from the terms as I've seen them, that neither the lender nor the government will seek to enforce the loan against a main home or main vehicle. So they will not seek to take away your home or vehicle, I suppose your livelihood, if you cannot make repayments. Presumably they will try and get repayments from you in some form before the government just gives a little bit of money and pays off the loan. So as we've said last week, and as I just want to repeat, whether you're a company or a sole trader, running out of money is incredibly distressing. And if you think there's a risk of it, please think this through before you enter into this agreement. However, there is an additional risk if you are a sole trader or a partnership, in that the government may take personal assets to pay off this loan before the government will step in. Let's just think about the impact on other credit as well. They can't take your house against this loan, but that's certainly not the case for most other loans if you have a personal guarantee as a director, or if you are a sole trader or a member of a partnership. So just think, maybe this loan is covered, but if I can't make my repayments because I've taken out a new loan and because my repayments have increased, then it might be that you find yourself struggling overall, and that to pay off other loans, the lenders look to take some of your personal assets. So watch out for that. Okay. SEISS grant. So this grant scheme, as you know, or as I hope you know, was announced quite a while ago. It was one of the first schemes to be announced and one of the last to be brought in, but we've finally got there. It's an 80% grant of your average monthly takings, monthly profits, excuse me, which will be paid as a single instalment to cover 3 months. It's capped at £7,500 in total, and we now know this is new information as of yesterday, so thank you Richard who told us about this. Online application form will be available from the 13th of May, which is next week. So from next week we can make the applications. HMRC, as they have with other grants, intend to make payment within 6 days of a successful application. We've seen the government and the government's agencies consistently hitting this target. So I take them on good faith that they'll do the same on this one. So if you're making the application nice and early and it's successful, it's not challenged by you or by HMRC, then the money should be with you after 6 days. So why might they challenge it? Well, the HMRC have said that they will look in further detail if you have been late to submit returns, if you have resubmitted tax returns in the past, or if you're a member of a partnership, they will need to look into it in a bit more detail. There's a few other reasons they might as well, and they're listed on the government website on the SEISS guidance page. But those broadly are the main ones that I think will impact our clients. So those are those. I believe that this will be a highly automated grant application. I believe that HMRC will take information they already hold from previous year's tax submissions, mash it together with your name and your bank details, and that the computer will give us a grant figure of what you're allowed, I believe. However, I'm not certain of that. What we do know is there'll be an online form, and there is already an online form to check whether you are eligible for this grant. So if you visit this website that's listed here, I'll put a link up in the comments on YouTube. I'll put a link with this as well. Then you can go online now immediately and check whether you will be eligible for this scheme or not. One of the questions we received quite a lot about a month ago is, am I eligible? I have a company, but it's only me, so I'm sort of self-employed. The definition, the best definition I can give you for self-employed as far as this scheme goes, is you must complete the self-employment pages of your personal tax return. So if you're a company director, you will probably be filling in the employment pages as a director rather than the self-employment pages. If you fill in the self-employment pages, there may be support available to you through this scheme if you're eligible. In previous webinars, we've discussed the detail around how they'll calculate your monthly profits. So I'd like to remind you that they're available, but also the most recent guidance is available on the government website as to how they do that. I'm not going to go into detail because I think it would be highly automated, and so within a week we will all know anyway. One point I just want to make, and it's kind of on the next slide, is that it appears from the best of our knowledge at this point that you will have to apply yourself. We as your agent will not be able to make the application for you. Therefore, you will need to be ready to do it. In order to be ready, it most definitely is covered on this slide, isn't it? In fact, it's all that's on this slide. Agents cannot make the claim, you must claim yourself. But what information do you need? Well, there's a list of information you need. We've made a little checklist for you, and that information is your unique taxpayer reference. This can be found on your self-assessment tax return. You'll also need your national insurance number, which again is on your tax return. You'll need a government gateway access. So that's known as a user ID and password for the hmrc.gov.uk website. You will need that, and you will need to have self-assessment listed. This is my understanding. It might be that I'm wrong about that. You will certainly need online access, but you may not need to have connected the self-assessment part of the web service to your account. What I would say is there's no time like the present. You will be making this application yourself rather than us. And so ensure you have your user ID, your password, and if you cannot access your self-assessment information on there, then now's the time to sort that before the 13th, before the rush of other people doing it as well. This was only announced yesterday. Today really is the best day to be doing it. You'll also need your bank details. Presumably that won't take you very long, but it's a bit of a pain if you start filling in the application form downstairs and your bank details are upstairs, and then you go and get your bank details from upstairs, you come back down and it's timed out and deleted everything you've entered so far, which happens so many times for us with the furlough grant scheme. So get these things ready before you make your application. Okay, that is SEISS grants. Diana, if you'd flip on. Next, we're going to talk about, I hope flip on isn't a rude thing to say to an employee. I just thought that. Anyway, we're going to talk about the local authority grants next. And it was announced over the weekend again, I believe, that more money is going to be given to local authorities to encourage them to support people not so far covered by the local authority grants. To remind you, the local authority grants are being paid to businesses who receive small business rate relief, and a couple of other specific reliefs as well. But broadly, what it means is that you need to have a property and not be paying non-domestic rates on it. And if you fall into that category, you are eligible for the grant and you probably received your payout at some point in the last month. If you haven't, and I believe there are still some who haven't, although I don't have any clients in this position, then do get on and make your application before these funds start to dry up. They've put more money into the pot though, and this money is to be used at the local authority's discretion to support people in shared workspaces, people who have market stalls, other people who've got fixed business costs but do not have a non-domestic rates bill. For example, because their landlord pays it for the whole building as one instead of the individual month in, month out tenants, or something like that. So this will help a lot of people who are in that position where they have fixed property costs. I also understand that it's being opened to some charities that for various reasons have not fallen within small business rate relief. This has always been the case that the local authority can give money at their discretion. This is my understanding. But what is new is that the Chancellor and the government are encouraging them to support businesses that maybe the local authority rightly considered to be outside of the scheme before. It's just making it clear that there are more people who can be supported. I'd be very interested to know how this goes. So if you're in a position similar to what we've described and you do contact your local authority to try and get one of these grants, then let us know how it goes. Also, my understanding is they do not have to give you the full 10,000 that they've given to other businesses. They can give you up to 10,000, and some other businesses can receive some different amounts, but it's a discretionary grant based on your individual circumstance. So we'll have to see how the local authorities apply it, and hopefully they'll apply it consistently as well. That's all I wanted to say about local authority grants, I think. It's what happens when I'm prepared in advance. I forget what order my slides come in. Yeah, that's it. That's everything I wanted to tell you guys about this week. I wonder whether you've had any questions. So we'll just have a quick look and see whether there are any questions. Again, no questions. What I've noticed, because I've had the presentation running alongside me, is that you guys are about a minute behind me. So we will hang around now and just see whether you have any questions. Any that you have, we'd be happy to answer. We can either answer them now, or if you have something you prefer to ask us individually, then just get in touch with a member of the team and we'll definitely be happy to talk you through our understanding of the current legislation, what's going on, and support you in any way we can. Oh, it looks like we have a question. Thank you. So this question says, can you cover what's included in trading profits? From the guidelines, it looks like there are lots of business expenses which HMRC will deduct before assessing trading profits. Is this my understanding? Yeah, absolutely. This is my understanding. So in the same way that we calculate your taxable profits for your self-assessment tax return, broadly speaking, this is how they will be calculating your profits for this grant. So it's not your turnover, it's not the money you receive from your customers, it's that minus your normal business expenses, your taxable business expenses, and you list all of these on the tax return. And then that leaves you with your profit. That's the money that's available to you to spend as you wish, not on the business. And that is before your tax payment. So turnover minus costs before tax payment, and that is your business profit as we understand it that will be used. I will just remind you that it's an average of the last 3 years. However, if you've started in the last 3 years, then there's a different method for calculation. I also believe that there is an option to look at just your 2019 profits in those cases, because if you're just starting up, you may have had a really strange first year in comparison to a normal business year. So the specific rules for people who are new into it. Broadly speaking, the profit that will be used will be the profit that will be used is going to be the profit on your tax return. Now, this is my understanding, trial by fire will be next week, and so on the 13th, which is just after our next presentation, frustratingly, we will know exactly. We may have more detail by the 12th, which is when we're going to be back next. In the meantime, if you've got any questions, do let us know. You can contact us in the normal way you get in touch, really. It's really useful to know what's concerning you, so please do get in touch with anything on your mind. Thank you to Diana, thank you to Charlie, who's been there in the background to answer your questions. A job that's getting easier and easier every week. So I might volunteer for that one next week and get one of the other guys to present. That'd be fun, wouldn't it? No, they don't look happy with that idea. Thank you very much for joining us, and we'll share more news as we get it. Keep an eye on Twitter for our most up-to-date announcements and the information we want to share with you, and see you guys soon. Cheers. Bye.